All right, so multiple time frame analysis. We did levels in lesson one, and I want to go through different time frames that you can trade on, different ways you might want to, or you might hear them referred to. So, you're generally going to have, you want to think of the market, or you want to think of price moving in. I'll get to this later, but fractals. So what is happening on the lower time frame is growing into a bigger time frame, and then a bigger time frame, and so on and so forth, right? Because price doesn't just go straight up or go straight down; it moves along the way. So you're going to get waves in your chart. Clearly, you're going to get price movement in your chart, but when you're trading, you want to have some time frames in mind. Some people do not trade 5-minute charts. Some people only trade 5-minute candles. Some people only trade daily candles, for example, or 240-minute candles. And it's also going to depend on your asset class, whether you're futures or forex. So primarily, I trade futures, and primarily what we teach is futures. So we're going to stick to futures. If you're day trading, you may use a 1-minute time frame. And real quick, I just have this note here: L, I, and H. So low, intermediate, and high time frame, right? So you might, or one could, trade a 1-minute. Use a 1-minute, a 5-minute, and let's say a 30-minute. Okay. You could also decide that your trading time frames are going to be 5-minute, 15-minute, and 60-minute. And then some people will trade a 15 and let's say a 60, and we'll use a daily as a higher time frame, as a higher time frame. Okay, so you got your lower time frame, your intermediate time frame, and your higher time frame. You may also see people refer to this as your trading time frame. This can be your trend time frame. And then your higher time frame is going to be your. So it is sometimes referred to as curve. Okay, so we'll keep it at that for now. And you may even see some people refer to this as your, let's see, we're trading and curve. So we'll stick with that for now. Okay, no need to make it too much complicated. More complicated than that. So what are you looking at here? Well, you want to move in increments. So if your lower time frame is a 1-minute or a 5-minute, figure you want to go up anywhere from, let's say, 3 to 5 times that to find your next higher time frame. A 1-minute times 5 is going to be 5 minutes. A 5-minute times 5 is going to be 25 minutes, right? Sorry, that 1, 5, 15. This was supposed to be 30. Okay. Oh no, sorry, we're going down. So 1, 5, 30. Okay, 5, 15, 60, 15. 60. Now it's 5 times 5 is 25. Okay, well, 30, because most people will use these time frames: 1, 5, 30, 60. Some people use a 180, a 240 is pretty common. From there, you're going into daily, weekly, and monthly. Okay. So, and again, we run the math real quick on 5. 5 times 3 is 15. 15 times 3 is 45. Okay. Well, what gets you? Can you trade? You can absolutely trade a 45-minute chart. You can trade any time frame chart you want. Someone that I pulled a lot of my, let's say, rules and technique from, I know actually has experimented with, and if I'm not mistaken, is now doing it more regularly. He will just keep adjusting the time frame until he finds the picture that he's looking for. If that means he's on a 17-minute time frame, he will use a 17-minute time frame. Now, how he uses what we're talking about beyond that is not relevant at the moment. Okay. This is not by any means the only way to do this. This is just going to give you a basis for when you're coming into trading. And this whole series is a basic toolkit, a trader's basic toolkit, right? So this is just basics people need to understand, their foundations. Okay, I'm a big believer in foundations in anything. So this is just going to be basics and foundations. Once you have some, you're navigating these concepts comfortably, you can start to manipulate them. You can start to develop your own strategies. So if you're using a 1, 5, and a 30, which I'd say is pretty common in day trading, you're in and out. You might be out in a minute. You might be in a trade for a minute. You might be in a trade for an hour. Day trading 1, 5, 30 is pretty common as far as levels go. So I already spoke about how you identify levels. I mean, let's do a quick review on that real quick. We'll just go to a random place in the chart, and I'm going to go to a 30-minute. So we'll use 1, 5, and 30. Go to a random spot in the chart, and let's just say it is February 9th, and the time is approximately, let's go 8:30 a.m. Eastern. Okay, these times are all Eastern. So here's a rally-based rally, and I'm just gonna snag these, not get too deep into the specifics, or the nuances of levels. Okay, drop, base, drop. We're on a 30-minute right now. I'm going to color code these for reference. The colors are not relevant. I just coincidentally will use a blue box for my higher time frame. Just random colors I just happened to pick one day. So I'll use a blue box for my higher time frame. So we got 30s right now. We could go up here to the left and see if there's anything nearby. Sorry, wrong horizontal line. Take a quick look to the left, see if there's anything above that we want to be cognizant of. No. And whatever's back there is way back there. Okay, so we're here right now. We just woke up. It's 8:30 in the morning. Any other 30-minute levels? You'd have to go way down here. And you'd also have to take note that this level right here has already been hit. Oh, actually, no, that level's already gone. So at the moment, I mean, that's what we have. Okay, got a 30-minute. Woke up at 8:30 in the morning. We got a 30-minute level above us. We got a 30-minute level below us, right? Or we're in it, actually through it. Okay, at this point in time. So February 9th, real quick, I'll jump to a 5-minute. Okay, here's February 9th. Like I said, it's 8:30 in the morning when we get a look at this. And we were slightly through right there. Here we go, 8:05, whatever. And we want to have an idea of where our 5-minute levels on the screen. So real quick. Go here with a drop base drop. Okay. Five there, drop base rally 5 here. With regards to, what is the quality of these levels, and are these levels that you actually want to trade? At the moment is a different discussion. So just trying to get used to, just want to get used to being able to see these things on a screen. Okay. So drop base rally. All right. Lastly, 1-minute levels. And this is, I'm doing it this way for demonstration purposes, to have all this content on the screen. You might not really, you just might not vibe with having stuff all over your screen when you're trading. So, again, to each his own, but for demonstration purposes, I just want to be able to point some of these things out to you guys. Rally base drop. Here's, drop base drop. We said it's 8 o'clock when it's about 8:30 when we got on here. Okay, so we know that so far. No gap there. Gap. Base rally got a gap there. So all right, last one. This is a drop base rally right here. Now it has already been hit. So again, that the freshness of levels is another discussion. Okay, so now you're, let's say, set up for your day in a way. 8:30. Let's get back to 8:30 there. So if we were to crunch this down, we could see. Now we know we have levels. Now we know we have where we have levels. Okay. Now the idea is to determine your trend. The idea from here is once you have your trading trending and curve, all right, you want to determine your trend. Actually, let's make that number 2. Okay, give yourself a bigger picture overview first. You always want to do top-down analysis, right? So top-down. What's happening on your higher time frame? Okay. Great. You can then determine you can do this in either order, honestly, because you're just setting yourself up for the day. Okay. You're prepping yourself. You're trying to get an idea of where the market's at, what the market's doing. So you can determine your trend, and you're going to do that looking at the intermediate time frame. And lastly, you want to find your trading areas or zones, right? So you're going to label your zones, and you're going to do that on your lower time frame. Okay. Again, this is basics. All right. This could be happening on a 1-5-30, a 5-15-60, a 15-60 daily, or any numbers you want to put in here. You just need to understand the concept that you're going to want to break this up into, let's say, thirds, just for an example. All right. So if you now know that, on your 30-minute chart, and you can see this on a 30-minute chart. Let's go back to the 32. If you started on your 30-minute chart to get an idea of your bigger picture, there's a couple of things you're going to see here. Aside from the fact that you identified these zones, your 30-minute chart is from here to here is moving down. So clearly it's a downtrend. Okay. Looks like it's trying to make a move to the upside here, but so far has not confirmed that. All right. I'm going to back up for a second from time frames, and I'm just going to go to determining trend. You want to be trading with the trend. You're gonna find least resistance, and trading with the trend. Counter trend trading is a thing. You can do it. Definitely not suggested when you're starting out. So if the trend is down, you want to be taking shorts. Okay. Determine trend and trade with the trend. Find the trend and trade with the trend. Okay. If we're down, look for shorts. If we're up, look for longs. Keep it simple. All right. For determining trend, we're going to use pivot points. We're going to use pivots for determining trend. Okay. So this is a 30-minute chart, and everything we're talking about, a chart is a chart is a chart. Okay. So here you had price moving up. You get here. Okay, price moved up. Let me get a thicker line so you can see that a little better. Okay, price moved up. Price came down. Came back up. And down. Okay. And if you want to add in this one, you can add in that swing there. And that makes it even more clear, right? So at the moment, lower high, lower low. When you have a lower high and a lower low, you are confirming your downtrend. Okay, you're in a downtrend when you have lower high, followed by lower low. Cool. You're in an uptrend when you have a higher high, sorry, a higher low, followed by a higher high. Okay. So down, down, down. In this particular case, we're still going down. Okay. Still going down. Here we're going to go. For the case of this example, yeah, we went low here. We came back up. We went lower here. Okay. So I need to jump up here and grab a line. Hold on. Okay. Price comes up from here to here. From here to here. From here to here. Okay. Hasn't cleared this high yet. Okay. So you don't have a higher high yet. So this downtrend looks like it's trying to go up. Okay. So don't actually get your higher high until over here, which means this is basically this whole thing. Now you have a higher low. Now you have a higher high. Okay. So at this point, you got a higher low. And here you have your higher high. Now you're back into an uptrend. And from this point, you had a lower high. And here you got your lower low. So now now you're confirmed in a 30-minute downtrend in this case, because we're on a 30-minute chart. The time frame at the moment is not relevant, it's just the price movement that we're looking at. Cool. And then here's your change in trend. Higher low, higher high. Now, after the higher high, did it come down here and go lower? Yeah, there was probably there might have been news. 1 o'clock is a oh yeah, this is probably a news event. Okay. So unfortunately, you're just going to have to ignore that with regards to how we're explaining this. You can be actually, no, you don't have to ignore that. You can be in an uptrend and still have price come down and go lower than the previous low, and then still go up and continue the uptrend, obviously, because we're looking at it right here. Okay. All right. So here, let's see. Now it gets a little tricky here after this news situation, right? So in theory, based on everything I just told you, because we took out the higher low, this downtrend is broken, but this downtrend, but the this uptrend is broken, but the downtrend is not confirmed. Uptrend is broken, downtrend is not confirmed. Because for a downtrend to be confirmed, you need a lower high and a lower low. So we'll go back here. We're high again. We're here. Where does it take us? Takes here we go, here we go, here we go. there. Okay. And now this was downtrend, downtrend, downtrend. Higher low, higher high, back into an uptrend. Then we come down, we break the uptrend that was just established. We break the uptrend, but we don't have a confirmed downtrend. So it's a little bit in limbo, perhaps. Okay. Back up, higher high, which now would basically qualify all this as sideways for the moment. Okay, because now we don't have a trend established because we don't know if we're going up or we're going down. Price comes down, price comes up, price comes down. So now you have your lower high here. You got your lower high and your lower low. So now your downtrend is back in place. You know, the bigger overall picture here, if you just look at these big swings, yeah, downtrend here. Okay, it's a little more obvious in this bigger swing. Okay, so you know, what do you do in this case where your trend is maybe not clear, or the method you're using to determine your trend isn't clear? Maybe just don't trade until it's clear again. Okay, there are trades you can take in a sideways market, but if we're talking about basic base knowledge and whatnot for now, especially if this is new for some of you guys, then this is what you want to know and stick to. Okay, so now you got a lower high and a lower low from here. So we're down, up, down, lower high, lower low confirmed. So now your downtrend's in effect. Now now let's see what happens if we get that out of the way, because I already jumped ahead and I put these time frames on here. So let's see at 8:30 in the morning, you know, you're trying to figure out what to do at 8:30 in the morning. So you take, what do you know about, all right, so if you're trading a 1, a 5, and a 30, you know where your 30-minute levels are. And actually, this would make a good point as well. So if we were right here, we opened our 30-minute chart up in the morning on February 9th. Market hasn't opened yet. It's 8:30 in the morning, right about there. Okay. You know where you have a level of supply up here. Okay. Drop base drop. Where is your level of demand that at the moment is still fresh? Do you have a drop base rally here? Okay. This big red candle right here. Drop base rallying this extended candle out here. Okay. Now I'm going to go look over here, see if I have anything else down here. And you got a rally base rally in here. You got one there, and you got one right below it. Right there. Let's stretch these out a little bit. Now, clearly, you know, this is hindsight stuff at the moment, right? I'm talking about this and I'm marking these levels, and then I happen to move the screen over and you guys see that we ripped right through these levels. But you know, there's context that needs to be put into play, whereas this is February 9th right here, and we're not even making our way down here until, you know, February 19th or 21st. So based on what's happening over here in these days, you'll determine whether you even want to consider these levels or not. But for the sake of this conversation right now, where we are just trying to determine what's going on at 8:30 in the morning on February 9th, this is what we need to know. So we just want context where those levels are. Okay. Whether this is a level that you would consider taking or you'd like the structure of it, again, also another story. And we're not talking about trading 30-minute levels at the moment, so that's not overly important at the moment. So if you're day trading, all right. So trend. If we're going to trade 1-minute levels, we want to know what our 5-minute trend is doing. So at 8:30 in the morning, at 8:30 in the morning, what's your 5-minute trend? Your 5-minute, well, it was, let's start with what it was doing. So you get an idea of, okay, here's a swing, 5-minute swing, price is moving up, price is moving down, price is moving up, okay? F12, SARS, higher low, higher high, low, higher high. Okay. Your 5-minute is in an uptrend when you open your chart up at 8:30 in the morning. Sorry, well, not at 8:30, because what happens here? Okay. It's in an uptrend from here to the left. The fact that we also hit that higher time frame demand is also relevant. If that higher time frame supplies overhead is relevant. If that wasn't there, there could be a different story as to whether the 5-minute is going to continue moving up or not. But you can easily determine your 5-minute trend right here. Okay, so you went up, came down, you went up, came down, and there, and there. So at 8:30 in the morning, you know if you're day trading and trading 1-minute levels, and your 5-minute is in a downtrend, then you want to be short in 1-minute levels. Okay. Not to mention, in this particular scenario, price just ran up and hit a 30-minute level, which is your higher time frame, which is your higher time frames are always going to trump your lower time frames. Okay. So price was moving up, 5-minute uptrend, slammed into a 30-minute level. That actually should be, that will be significant, especially after this big move, that you'll want to pay attention to. That, all right, now that, yeah, we're trending up in this 5-minute, but we just hit a 30-minute and we're starting to push down. So here's your lower high and your lower low. So now you know clearly that you may be witnessing a trend change. Okay, lower high, lower low. There's your trend change. So you know you have a 1-minute level marked here. Okay, because we went down into the 1-minute chart and we marked it. So you know there's a level there. You know there's a 1-minute level here. So if you're 5 minutes in a downtrend and you just came off of this 30-minute supply, you're willing to be short in a 1-minute level. You're also willing to be short if it passes your 1-minute level and bumps into this 5-minute level. You're willing to be short there too. Okay. So let's bring it down to a 1-minute now, because we're day trading, let's say. Let's see how we can make sense of this. Okay. Okay, so you didn't remember this yellow line is representing 5-minute movement. So if your 5-minute didn't make its lower move until it was here, right? Because this was what we would refer to as the controlling swing low on the 5-minute. I'm sorry, I take that back. This was your controlling swing low on the 5-minute. So you already broke that controlling swing low right here when we came through here. Okay. Uptrend, 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 came down, broke this swing low. Uptrend is broken. Now we're looking for confirmation and downtrend. Again, just look at the yellow line for the moment. Come back up, come back down. Now we got a lower. We're lower than this point here. Right there. We came lower than that point right there. So now you're in a downtrend. So now you're looking for 1 minute. 1 minute's a great place to be short. You have your level marked. You can put in a limit order. You can, there's, different ways to get into positions. Okay, got 1 minute marked. And I marked this. Remember, I actually marked this before without looking to the left. So I don't, and I'm just creeping through here right now. This might even go higher here. So let's figure it out. Okay, and it does. Now, how you mark your levels is going to be, is also going to affect, whether you are or are not getting into a trade. So in this particular case, I can go back to a 5 and check that, but I'm pretty sure that was the more or less exact low where I had this level marked before we started this conversation. Okay, now if you took, by the way, if you took a trade in here, you took a short here at 41.65. You had some potential to maybe make it through here. So we get up in a 1 minute level, and look, it's you don't know if we're going to hit here and we're going to make a lower low. You just don't know. It could hold one day and it could break another. All right. So on your 5 minute, if you go back to your 5 minute, what you're going to see is you broke this lower high. Okay, which means you broke the 5 minute downtrend, but you don't have a 5 minute confirmed uptrend. All right. So we go back to a 5 for a second and see if we can see what we can make of this. So that 1 minute level did hold. It just didn't have enough juice to push through here. And, for context, if you have a 30 minute, you're bouncing around near a 30 minute level anyway, this is not surprising that this comes down here, can't seem to get through here, comes up a little higher, and then takes off to the downside. Okay. So on your 5 minute, we came up here. If we're on the 5 minute chart, we came up here, we broke this, what is an intermittent downtrend. And again, this is really another trader might look at this or a more seasoned trader will look at this and see that we hit into this 30-minute level. We came down, we went here. And what I'm saying about this trend changes once here, changes again here, changes again here. For the sake of understanding the concept of how price moves, what I'm saying makes sense on a broader scale. you might not even consider this downtrend right here, downtrend broken, uptrend back in play, uptrend broken, downtrend back in play. So keep it simple for now. All right. So if we do go up and we come down, if price goes up and comes down here, even though it went up and took out this low, again, like I said before, that breaks the downtrend, but it does not confirm an uptrend. So as long as the uptrend is not confirmed, you still want to look for shorts. Okay, uptrend's not confirmed, so you're still looking for shorts. So if your 1 minute level here got taken out, all right, I'll try another 1 minute level. You know, maybe there was a 1 minute level in here, and if you had them both marked, then maybe you got it there, right? Or maybe we came up, we hit this 1 minute level, and then let's just say we came up, hit this 1 minute level, and then price put in, you know, maybe a drop-based drop right here after hitting this level, then maybe price came up to here, came down, let's say up, down, drop-based drop, down again. If it came back to here, you could consider being short there. Okay, but we don't know that. There probably wasn't a 1 minute level there anyway. I'm just saying hypothetically. Okay, so you're still in a downtrend. You know you got a 5 minute level there, which is why it's great to throw your levels on the screen prior to your trading day. So when price starts moving around, and we haven't even had the 9:30 open yet on here, right? Let's see, 9:30 would be right around here. So the open was somewhere right around here in this candle. Okay. So now if you didn't have confirmation already, and what we knew again was we knew we were looking for 1 minute levels to be shorted. And let me just go here and do this real quick, see if I can get a really good example out of this. If in this area here, I had that 1 minute level marked. Was there something in here I can call a 1 minute level? I mean, if you're saying you need basing candles, you know, this is on a 1 minute chart. This is not a basing candle. This is not a base candle. This is not a basing candle. These are basing candles right here. So on a 1 minute chart, this could I mean, I'm really just pushing it to try and make an example. You can say this is a rally base drop right here. Okay. Even though, you know, where you're rallying from, there's not like any significant move here. But if you're just saying that a candle that is 50, 75, let's go 75% or more, you know, there's no wicks here. The whole body of the candle is pushing up. Great. Here's a candle with half the body. So it's a basing candle, basing candle, basing candle. Here's a full candle pushing down, followed by a bunch of other red candles. Great. So rally-based drop. Don't look into that too much. I'm just trying to exaggerate this idea that if you have your 1 minute levels already drawn out because you're looking for 1 minute levels to be short in, because your 5 minute is in a downtrend and your 30 minute is in a downtrend, then here you go. So yeah, you tried that one. Depends on how many points you're trying to get to. If you're risking like 3 points on this, or you're risking, let's say you're risking 1.5 points, 2 points, you're only trying to make 6. If you got in here at If you got in here at 64.75, let's go 65, make this easy on my math. And you're risking 2 points and you're trying to get 2 to 1, you only need to go down to 59. There's 59 right there. So you could have made a 3 to 1 trade off of that right there if you were risking 2 points. Okay. 2 points of risk times 3 is 6. You got to make 6 points off your 65 entry. 41.65 is the entry. You got to go down to 59 to make your profit target. We're not talking about taking profits right now and what you need to take into consideration for that. We're just talking about how do you get yourself set up to take trades. Okay. All right. So now here we are again. You are, even though you broke this uptrend, you are still in a downtrend until you get a higher low on the 5 minute. So if at this point in time, we're still on this 1 minute chart, okay, we came up, we hit your 1 minute level. We don't know if you're going to come up through here and take out this 1 minute level completely. But if you happen to know that you have a 5 minute level there, your 5 minute downtrend is likely going to bounce off that and go down, which is exactly what happened here. Okay. So now looking on this small time frame for a moment here, if you're trying to figure out, I'm going to skip that thought. Okay. I don't want to confuse you. So you are still in a 5 minute downtrend. Okay. Moving down, you need 1 minute levels to get short on. Now you want, if price goes below this low, okay, on the 5 minute, okay, it went below the low. Cool. There you go. You're not in a confirmed uptrend on your 5 minute, even though you broke your 5 minute downtrend temporarily. You're not in a confirmed uptrend, so you can still consider looking for 1 minute levels to be short on. This is a rally, base, and a drop right here. So price was going down, 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 down. You're looking for 1 minute levels to get short on. Yes, it's moving down, but it's not leaving any levels for you to get short off of. Okay, except for this one up here. So coincidentally, it comes up there. Maybe you get short. Okay. And then the other thing we're looking for is for price to, well, you don't have to be looking for it, but it's good to note, is at what point does price go back into that confirm or reconfirm? In this case, I'm going to say reconfirm this 5 minute downtrend. And it happens here. Okay, now I can see this. This should be on a 1 minute, on a 5 minute chart. This should be the case. Go back to a 5 real quick. See if I'm right. What would you see on a 5 minute chart? You would see that from here, price came back up. Price came up, came down, came up, came down. You know, it depends on how specific you're getting. I'm just sticking to what we've said so far. Okay, so price came down, came back up to here. Okay, here's a swing down, here's a swing up, here's another swing down, whether you go here or here, doesn't matter. Now, even though you had a broken downtrend on the 5, you didn't get a confirmed uptrend on the 5. So now you have, again, a confirmed downtrend on the 5 or a reconfirmed downtrend on the 5, if you were wondering. Okay, so from this point, because this is the 5 minute low, go back to the 1 minute chart, and then anything after here, you could potentially be looking for 1 minute levels to continue to get short on. This is good to note too, just from a fractal point of view, right? Price came down here, hit this 5 minute level, and pushed up. but actually right there took out, when I say right there, I'm talking about right there at this point right here. Sorry, right there. Okay, it won't actually let me put it there, but the tip of this candle right here took out your 5-minute level. Now, levels is subjective. How I draw a level is different from how someone else draws a level. But for me, if I put that level there and I saw that level get broken, I would take that as just extra information. Wouldn't necessarily confirm something for me, but I would take that as extra information. So I know when I went up here, when I pushed back up here, that there's a chance I can be short up here, or at least when I come down here and reconfirm my 5-minute downtrend at this point right here. Here's my lower high. Here's my lower low. So I can, again, now that I have my lower low in place, I can come back into this 1-minute chart and look for levels there. And here's another thing I'll do, by the way. When I get to that point where, and it happened around 8, that point where price breaks my, for example, this 30-minute level, 8:15 in the morning. Let's see how that works. I will actually cut that off again, just for my reference and context, just to remind me that there was a level there. There was a higher time frame level there that price took out. All right, so again, we're day trading. We're trading 1-minute levels. We're looking for places to get in and out. We're an hour in, so I'm going to start wrapping this up soon. Here we go. Great. So if we're on that 1-minute chart, and 5-minute came down here, made a lower low, made a lower high. So there's the lower low, reconfirming my 5-minute downtrend in this particular situation. Where is there a 1-minute level in here that I can get short off of? Depending how you read a chart, there isn't a 1-minute level in here. So you may have to just have to let price play out. 1-minute chart, 1-minute chart, unless it comes back up here and you can get in there again, then you go for it. Okay. Okay, so maybe you didn't find an opportunity here. And again, how I look at this and how you look at this is two different things. Okay, especially since you know that this was the lower high and this was the lower low. You may, maybe you can get into a 30-second chart and find something in here that tells you can be short here. Okay, you would just have to drill down the time frame. But since I could do that and go in here and maybe find a reason why one of these areas right in here would be a place to get short. I don't want to go off on that tangent at the moment. Okay. Drop, 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 base, drop. So again, you're looking for 60-minute levels. Sorry, you're looking for 1-minute levels to be short on. You know, what's it? It's not giving you too many options because price is just on a tear, right? Perhaps these overlapping wicks, right here, okay, because price tried to get back up here and it couldn't, came back down. Nothing, nothing, nothing. Still moving down, lower high, lower low. Trying to find yourself a level. This is a rally base drop here. You know, I'm putting this without rally base drop, drop base drop. So this is rally base drop base drop. So this area, if you were actually quick enough and you saw this happen right here, rally base drop, drop base drop right here, you could maybe get in here just as it touched back right there. Okay, we're moving down, we're moving down, we're moving down. Okay, this is a This is a drop base drop here. I don't, for the moment, have any context to what's below me. Okay, I do know there's a 30-minute level down here. So, we don't know if that 30-minute level is going to hold, but put it this way, if we tap into here, I don't want to be trying to be short these smaller time frames, okay? Okay, so maybe you got short in here. Okay. Okay, so if you did get short in here, because again, that you're in a 5-minute downtrend, that's what your yellow line is. You're in a 5-minute downtrend. So you're looking for 1-minute levels to be short in, or lower time frame levels to be short in if you're using a 1-5-30. So you get short maybe in one of these. And if you were to get short in here, you want to know, or if you're going for 3-to-1s, maybe you're risking 2 points, maybe you're risking 3 points, which means ideally you want to make 6 to 9 points. If you get in at 41, can you get down to 32? Because 32 would be, if you were risking 3 points, would be what's it called? A 3-to-1. Okay. Now the answer in this case is likely, right? Because the downtrend is intact. You don't have a level until down here at 20 that you need to even start to be concerned about from a higher time frame perspective. So you can get short here. You can definitely get a 3-to-1. Maybe you decide to, all right, you're with the trend, you get short. I'll hold 41 down to 21. 21 puts you just before the level. And lo and behold, you're out just in time. Or, you don't know what's going to happen down here. But you do have a reference point that's something you want to watch out for. That's a level you want to watch out for. All right. So you determine your trend, you have your time frames, top-down analysis. We did that, determine your trend, label your zones. Move that. We did that up here. Backspace. Qualifying levels. I'm going to skip for now, and I'm just going to make a quick note about fractals, because prior to starting this lesson, I did jump into a chart to find and this whole thing that we just went through was actually a lesson in fractals with regards to higher time frame, lower time frame. But I want to show you real quick how, and there was an example of this yesterday in the chart of how price builds when it's changing direction or moving in a trend, okay, or the trend is fractal. So what I have labeled here is the point at which, actually, I want to throw this on I just want to throw this on a higher time frame chart. Just throw it on here. Too high of a time frame. Let's go here. Okay. So what my intention of putting this together right here is the colors are relevant. I just chose different colors to make a point. If you happen to pay attention to the daily chart, we are, show you real quick where we are on a daily chart in here. Okay. In a daily chart, you have this pivot low. It's drop base rally, okay, on a daily chart. So, maybe the last few days we've been based on your analysis, maybe you're looking for someplace in here where you can get long and maybe stay. You can either stay long or you know, for more of a swing trade, even though we're talking mostly about day trading. But if you were conscious of this area on the daily chart, then what you could have looked for, or what you may have wanted to be looking out for, was this bigger move up. Again, I stray because what I wanted to do was give you an example of fractals, of how the market changes from smaller to a little bit bigger time frame to a little bit bigger time frame, and bigger moves start to build. So the red circle is a point on the chart where the 1 minute made a higher low and then made a higher high. The blue circle is a point on the chart where the 5 minute made a higher low and then made a higher high. And the green circle is a point on the chart where the 30 minute made a higher low and then a higher high. Now, I may have put that circle real quick. Sorry, so this should be, this circle should be here to make the point, okay? So real quick, we go down into a 1 minute, we start to see the fractal trend changes is what is the point of my example, okay? 1 minute chart, price is moving down, 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 down. Here's your higher low on a 1 minute chart. You could also say it's like right down here and here. This is just a more clear example. That's why I'm using it. Here's your higher low on a 1 minute chart. There to there. There to there. Okay, here's your higher low and your higher high on a 1 minute chart. Okay, your 5 minute chart. Price is moving down on your 5 minute chart. Should have made those yellow lines red to match those red circles. Price moves up, price moves down. Price moves up. Here's your higher low, your higher high on a 5 minute chart. 30 minute chart. Price moves down. I know you all, at this point, you should see where this is going. Price moves down, price moves up. Price moves down, makes a higher low. Price moves up, makes a higher high. Make this even easier here. Let's do this and this and this and then this. And now you can probably see that all pretty clearly. So this is the concept of fractals I wanted to demonstrate. Okay. Open it up even more so you can see. So here you go. You had your 1 minute went into an uptrend. Then your 5 minute went into an uptrend. Now, mind you, you likely weren't awake for this. This is around the London Open. So your 1 minute went into an uptrend. A little later, your 5 minute higher low, higher high. Extra line in there. Okay, higher low, higher high. And a little later, we retrace on the 30 minute, which is the green lines. Big move down, price comes up, comes down. Comes back up, makes a higher high. Now your 30-minute is in an uptrend. What's next? If you level up from a 30, a 180 perhaps. So might be something to keep your eyes out for. Maybe we come down here, come up. So this is a 180 chart right now. Come down, maybe to here, maybe up. Maybe this thing just keeps building its way back up fractally. Right now, the only area of supply that I'm looking at happens to be right here, and that would be counter trend. Well, it's not counter trend on this time frame, because on this time frame, here's my move down. Okay, here's a move back up. And here's a lower low. So on this time frame, I'm still in a downtrend. Cool. All right. So if you guys got any questions, shoot me an email. I'm going to wrap this up. It's been about an hour and 15 minutes. I know I did not get around to qualifying fresh levels and positions. We'll just have to save that for another time. All right. Thanks for dropping in. I'll see you when I see you.